Now, that wonderfully crafted video you've just seen is some footage from last night's evening event, Night Summit, and maybe a few of you recognized yourselves in the video, or if you didn't and you want to make sure that you're in tomorrow's video, this evening's Night Summit event will be taking place in a bar called House on Leeson Street, and it's a great place to mingle with each other. You'll see a few of us there, etc. Now, I have to thank Ellen and Francesco for the session we've just had. And in that session, you heard how securing data is the best way to winning a consumer's trust. But our next guests believe that blockchain and specifically its transparency are going to redefine our understanding of what trust is to begin with. So please welcome to the stage, in conversation with Fortune's Robert Hackett, we have Jalak Jabanputra, the founding partner of Future Perfect Ventures. And we have, we've already seen her today, she's back again. We have the risk product owner of Lloyds Bank, Claire Kalmajan. Please give them a warm welcome.
Hi everybody, I'm Robert Hackett. I'm a senior writer at Fortune, and I'm going to be leading the discussion today. If you came here for the Blockchain for Evil session, I'm sorry to disappoint you. We're going to stick to the good things about it, so no drugs and money laundering, unless my panelists care to switch topics.
It's a good marketplace.
Yes. Anyway, so let's jump into it. Claire, I want to start with you. Coming from a big bank, what opportunity do you see for blockchain tech in finance?
That's such an interesting question, Robert, because I was Googling it and just find this stat, which is from 2017 from PwC, which was saying that about 75% of the German banks are actually doing nothing on blockchain. And sometimes I think, there is a bit of hype, but the reality is most of the people are more, watching the space at the minute when you are, in large organization, rather than really, disrupting or embracing the space. So why is that? The reality is we see some of the use cases that are really sprawling, like when coming from the startup investment. And in 2018, there was around 550 million, investment going in this space. I'm sure these guys will really know even much more the numbers. And, we see some early adoptions that have gone definitely when you go to investment, when you're an investment bank, when you do insurance, so, rapid settlements, or, in large banks that are commercial and retail banking area, we will see some trade finance. We'll see some areas where we'll work in mortgage registry, in sort code, but it's just small pockets as opposed as a big ticket, where it feels a little bit where the startups are going is a big ticket. They are going like, okay, we are going to sort out digital identity. We are going to have a e-currency, and we are talking about that and which central bank is going to issue first, like an e-cryptocurrency have yet to be found. So I think what in the more traditional space where we sit, where we've seen some successes are really by consortia. So we are part of R3, but that's really where you have the network effect. So it's like you're not just by yourself. It's actually all the actors that come together, and that's really where you have a potential and an opportunity. And this takes time in order to arrive.
How much time?
Well, I think it's if there is really use cases that are currently in the retail segment that are worth going after. I'm not sure. I think that again, insurance claim, rapid settlement, taking the efficiency in some areas around KYC. It's not like you cannot see it. It's just like it didn't happen yet in an environment where it's repeatable, it's scalable, and you don't make compromise. And so therefore, the technology is not just the hype of the technology, but it's really solving, distributed data problems.
Gary, how transformational do you believe this technology is going to be?
Yeah, absolutely. I mean, this panel originally was about transparency, but I actually think that liquidity is actually an even bigger sort of reason why this should happen. In the backstage, we're actually talking about democratization of capital, that most of the world outside of the Western world, it's actually very, very hard for them to get access to super high quality assets. And so that's why, I think Anthony Pompliano's here. And so he, if you follow him on Twitter, he is all about the security tokens. And I think that's, sort of one fever dream that I'm very, very interested in. Because
explain what a security token is.
Oh yeah, just the idea that every asset should be securitized the same way I can go on my Schwab account and buy, Goog. every house, every, even, cash flows like bonds and, mortgages, all sorts of securities and cash flows should be basically represented by a token of some sort. And the reason why it's interesting to us is because actually we funded a good number of crowdfunding companies and sort of, because of the Jobs Act sort of 3 or 4 years ago. Some of them have worked out, some of them haven't. And the difficulty with crowdfunding broadly is actually not that the lead gen didn't work. It's actually that you would do the lead gen, you would democratize the capital so anyone could say buy that private company stock or that piece of real estate, that commercial real estate. But then you would get to the legal level, you would get to the agreement, and there would be lawyers and accountants and reporting and KYC, AML, accredited or QP. You would kind of get lost there. And then at that point, you're not liquid anymore. And so sort of the fever dream of security tokens is actually this idea that if we have common software, common legal agreements, common KYC, AML, compliance, and reporting, then all things can actually be liquid. And I think that that's really interesting.
Jalik, you've talked about blockchains as being potentially a new internet. What do you mean by that?
Well, I started investing in the internet in 1995, and I was kind of waiting when I started my fund 5 years ago. Thought that we were ripe for another technology evolution, revolution. And we had the PC in the 70s and 80s, then we had the internet in the late 90s, and I just thought, the next wave of technology is going to be inherently global. It's going to build on the internet, but it's going to allow a hyper connectivity that the internet just doesn't allow. And so I went to my first Bitcoin conference in 2013, and I read the Satoshi white paper and just started thinking about not only currency, but data. I mean, think of how much data we've created by transitioning to smartphones. We have 4 billion more people around the world that still have to come online, and their first interaction with technology is going to be that smartphone. We also have 2 billion unbanked people around the world. We have a number, billions more, that are underbanked, that financial institutions have not found it efficient to reach despite the internet. And so I believe this is going to be, I say 10x the internet, and China actually just picked up on that. I gave a presentation in Beijing 2 months ago, and people were forwarding me that the Chinese television station this is their thing now, that blockchain will 10x the internet. And I believe it's because we have so many underserved in investable assets in terms of identity, and data resides in silos. And with machine-to-machine communication, machine-to-people communication, people-to-people communication, the internet infrastructure is just not going to be sufficient to serve all these people.
When you say 10x the internet, do you mean in terms of like a dot-com boom, all of the tech stocks going up, or do you mean in terms of its reach?
I believe if you look at the impact, and I'm an early stage investor, so I look at value creation, and I think there is so much capital just locked up in silos, a lot of potential, like human potential, that is locked up just because they don't have access to savings or loans and things we take for granted here. Now, if you start to free up that capital and that talent, just think, it could be more than 10x of what we see now.
Just to level set and take a litmus test, how many people believe that blockchains will live up to the current hype around them right now? You can raise your hand if you believe that they will live up to the hype. Or exceed it. Live up to
thank you.
Or exceed. Thank you. There are some doubters in the audience.
Yeah, there's a lot of hype.
They are not sold.
Yeah, there's a lot of hype, but it reminds me of 1995. I was an investment banker. I worked on the Netscape IPO. There were bankers at my firm that said, no one's going to use email. It's so slow. I can pick up the phone and call someone, or I can type out a note. Why would I type up an email and send it out and wait for a response? And I think we are in very early days where the infrastructure still needs to be built out. We need more scalability for some of these applications. We need more interoperability. But if you look at that is all being worked on by some very smart people, and I have no doubt that these problems will be solved, and is happening actually much quicker than those of us who started investing 5 years ago in this space expected.
The first Bitcoins were minted nearly a decade ago.
2009.
Yeah, how far along would you say that we are now? And how much further until we reach that 10x that you're talking about?
Oh, I mean, look, I think it's going to be a 20, 50-year time frame for that 10x.
Don't hold your breath then, people.
If you start, though, but a lot of people don't understand how this is actually being used. We hear about, all the naysayers at the banks who are saying they're tiny, and it's true. There's small pilots that there's experimentation, and very little has moved to production stage, but we're starting to see that happen this year. The Australian Securities Exchange just announced that they were moving all of their post-trade settlement to a blockchain-based system, and they piloted their current system with blockchain system for the last 3 years. And
that's
obviously,
digital asset holdings,
yes,
right?
Yes, exactly.
And
they're not going to rip it out unless they found some significant cost savings in that process. So these things do take time, but I think once we start to see the efficiencies and we start to see certain use cases play out, so BitPesa is a portfolio company that I know Charlene and I are on another panel later on, and I invested in 2014, and they decided to use the Bitcoin blockchain to provide more efficient payments in Africa. It can cost up to 20% of a transaction because of the number of banks that have to touch that transaction, and often they go offshore from Africa, go back onshore, it bounces around the world, so inefficient, and then everything gets converted dollar back to local currency, back to the dollar. And so now you have one FX transaction, almost instantaneous transaction, fees down to like 3% from 20%. Now, I mean, who wouldn't want that?
That's the dream. I mean,
Right.
Better, faster, cheaper is actually still the litmus test for blockchain technology. And to be frank, as you said, it's not here yet, but it's coming.
Claire, so Jalek described some banks as naysayers. Would you say that that's an accurate or fair representation? What is Lloyd's perspective on this?
The penalty of the description, I think, what's Lloyd's perception on what specifically, Robert, just to be clear?
About basically blockchain tech in general. Is there excitement about it internally at the company, or is it deemed as sort of an outside kind of like, oh, this thing we have to...
I don't think you can ignore. I don't think you can ignore 550 million VC capital investment. One way or another, you look at it and you surely want to have a strategy about it,
yes.
And make sure you have your running shoes and you can, spread up very quickly and be part of the conversation. Now, I think what I was mentioning is if you just look at the construct we have today in the retail and commercial bank, how do you identify big tickets that can really foster about it? And my point was this will only come in mature markets like in the UK through consortia, and so therefore it just takes a little bit of time. Now I think some of the theoretical promise of what blockchain can offer, I mean liquidity, I mean I think that's a ideal world, and I think that's very complicated overall. But I think the promise of having a digital identity that could be in the blockchain is definitely something that solves a lot of the problem. Now, very concretely, Robert, it's like you have to make a choice, because at the moment, it brings a debate at transaction level rather than seeing you as a holistic person. And then, you will have to make a compromise between the speed of the execution and the validation of your identity. So some of these problems are just not solved. They are just very complicated. And a bunch of very smart minds are looking at it, but can it fly or can it not fly? I think, it's yet to see some of the application of blockchain, and we were talking about Bitcoin, for example. I think sometimes are, have a high level of volatility. So you can see the latest number, we're saying that about 60% of the total currency of Bitcoin was sold in December of last year. And so, most of that was sold through Pump and Wells Group. So clearly, people owning the Bitcoin trying to influence it, as well as, we were talking about that. Most of the cryptocurrency currently owned by China in the market. And it's become a business with you can just Google in the internet and you will see these farms, of Bitcoin that have reached a point where people were like, okay, is it more productive to mine, or is it more productive to pay for the electricity of it? It's like, and we all know the stories of the university where the guy get caught because he was mining the Bitcoin, because it was free electricity, or people going in Venezuela to do that. So, but at the end of the day, it's people money. I take my Uber or I take my cab. I remember the other day I was coming back from the airport. I was in London, and I was probably having a call or a chat with somebody, and like the guy say, "Are you working in blockchain or Bitcoin?" He was like, "Yeah, because I own this cryptocurrency, and I've put a couple of them. So what do you think about it?" And Uber driver will often tell you, this is where they put their savings and their investments. And so, as an organization that spends this time, to make sure people money is safe and comply with regulation and make sure it's certain and robust. I wonder how much of the
I would just say Bitcoin is not blockchain. Bitcoin and crypto to me is a subsection of blockchain technology, and too often we just start conflating the two. And so what I think Bitcoin created or proved out this kind of economic incentive system that can keep data secure and provides kind of transparency around data in this global database. But we're going to see many different types of blockchains proliferate. JP Morgan has been working on their own with zero-knowledge proofs. And so I think, we'll see the promise of the technology manifest itself in different ways, and crypto and tokenization is one element of it. But then there's also the ability to just create more efficiencies in processes. Like KYC, there are billions of dollars in replication of the same KYC data. Now, there's no need for that. I mean, I would think that banks and companies and businesses would want to start weeding some of those costs out of the system and hopefully pass them on to consumers and businesses.
Did you guys watch Joe Lubin's talk earlier? Towards the end of his talk, he had this amazing slide that was calling out Uber and Airbnb as all of these sort of transactional marketplaces. And I think that finance broadly is really about also that sort of thing. It's creating these markets where markets didn't exist. And so that's why, to me, Ethereum, there were Bitcoin maximalists at the other stage just earlier. I'm kind of an Ethereum maximalist, or sort of a smart contract maximalist, in that that's the super powerful thing that might be able to happen. It can only happen now. It's that Bitcoin showed that you could have store of value, but now with code, you can actually represent these marketplaces and have legal agreements that are binding. You can have marketplaces that share exactly that, like databases of KYC that can be actually controlled by the user themselves. And so, taking it back to the litmus test for crypto, I think that yes, we're at sort of maximum hype, or maybe there will be more hype later this year. But
prices have fallen steeply over the past
exactly.
few weeks, so.
We're at a local minimum for now.
Yes.
But what we're trying to do in crypto broadly as technologists is say, here's a car, and that's the infrastructure, but we're also driving the car as we go. So, and that's the app level. And so that's the interesting, really, really hard thing that's happening right now. Literally, you have tokens like Origin token trying to make marketplaces happen on top of Ethereum itself, which cannot do that many transactions per second yet. And so, part of it is give it a little bit of time. Like people are literally driving a car at 100 miles an hour.
Right. It's like the Pets.com, Cosmo, all of these companies that tried out the internet before the infrastructure, the broadband connectivity, mobile phones were there, or secure payments on the web. And so that's what we're seeing with some of these application layer tokens and companies. I think the timeline to adoption, though, and tech development is going to happen in a much more compressed way, just because this is global. This is not just the Valley. Sorry, Gary. It's not just the Valley. It's happening everywhere, and there's smart people developing everywhere, and that's just going to speed up development.
I think the promise, we are debating the promise about having blockchain as an enterprise software that could be like super secured. And if I think about the journeys, of banks today and we are talking about that in the previous panel where I was, and I think Ritika was quite clear about, some of the estate of, IT and software engineering in this area. It's like, the roadmap at the moment is we are embracing, cloud. Most of the banks are like, making their migration. Most of the banks have now data plans, and this is going to take us a couple of years in order to get it right, to implement the right legal and compliance way, to implement, everything around GDPR, the securitization of the data. We've just, implemented in the UK open banking, and Lloyds was the first one to open our APIs and our product around it. So, that's the roadmap that is like the 5-10 years roadmap, for the banks, and that's going to be a consequent, investment to bring us to a cost-income ratio which is decent and make your enterprise very efficient. So I think, I'm not, it's like I'm super supportive and I'm an idealistic, in general, but then how do you map out, like the blockchain migration on the back of it? Because, if your enterprise is already efficient, it's already done, if your client needs is already satisfied, what's driving the need? Because the globalization, okay, but there will be a lot of different challenges about making also the globalization happen, and it's a world that is also regulated, so a lot of different questions.
Yeah.
Gary, you mentioned that you're an Ethereum maximalist.
Yes.
Do you remain one in the face of these new blockchains coming online, like EOS and Dfinity, and insert blockchain here,
yeah,
whichever one?
The thing that's most concerning, I would say, is that actually, these smart contracts may well be platform independent, and so Dfinity might just, run the EVM. And so at that point, actually, it's hard to make a case for some of these things that store values, but we're so early, who knows? I would like to make a point about bank adoption too, though. I think one of the things that is very interesting to think about in terms of, going back to the example of Airbnb and Uber. Uber, for instance, probably couldn't have started as a software platform selling to taxi companies. And likewise, Airbnb could not have been created by 20-year hotel industry veterans. And so that's one of the more difficult lessons that I think will kind of recur. I mean, Amazon could not come out of it could not have been created out of Barnes and Noble. It had to come out and do something very different and do something dangerous, actually, that was highly non-consensus.
Jalak, where are you most bullish now?
Well, I look at my investment strategy in two buckets. One is the developed world, and the other is the developing world. And I believe we're going to see some of the most interesting business models come out of the emerging markets because they don't have banking institutions, they don't have health insurance companies, and just like WeChat kind of showed a new model of banking and communication all rolled up into one mobile app, I think we're going to see similar types of business models start to emerge in some of these places. We just invested in Harbor, which is a company based in the Valley that is building compliance into tokens. I mean, right now, regulation's a big challenge around the issuance of tokens, and then being able to kind of build in smart contracts that have different regulatory regimes already built into the tokens. So say like a token can only trade to accredited investors in the US, but can trade in Hong Kong to anyone. It will only allow those trades that are allowed to happen. And so I'm very interested. I believe in tokenization. I think we need to build better infrastructure that gives regulators more comfort around this. And so that's a big area that we're looking at.
So we've got less than a minute left. I know I said that we weren't going to talk about blockchain for evil, but I want to ask Gary, what is your most dystopian scenario that blockchain could, if things went wrong with blockchain in the future?
I guess the difficult part is the immutability part. It's, sort of a double-edged sword. There are things that, how do you do GDPR when it comes to an immutable blockchain? Kind of hard.
Yeah. Or writing data, right? Writing data that's just not valid that then gets propagated. That's dangerous.
Well, thank you so much. There you have it. We'll end on that very happy note about dystopian scenarios. Thanks to my panelists and to everybody in the audience for joining.